Tom, so good to see you. I want to dive right into the headlines and talk about markets and geopolitics with the question, when will stocks recover? Rising tensions in Iran have pushed oil prices higher and created short-term volatility in the markets. Historically, however, geopolitical conflicts tend to have only a temporary impact on stocks. However, when we take a look at the S&P's 3-month performance, this is a chart from Finviz. We do see some red on the board here. So why do we tend to see stocks fall first when tensions rise?
I think a lot of it has to do with uncertainty. We're uncertain what is going on with the conflict, what the outcome is going to be. We're uncertain with things that we hear a lot of news about: inflation, rising prices, as you mentioned, oil and gas prices going up, food prices, so on and so forth. So people are a little uncertain. So with uncertainty comes emotional decision making, selling because people want to flee to safety because they think the worst. As you can see on that chart, most of that red, honestly, are those larger tech companies who have hit a lot of their peaks last year. And so now there's a natural pullback. A lot of that green is the other S&P 500 companies who are finally finding their footing in the economy and moving forward.
All right, so now let's take a look at some data. I know you are a student of history. So history does show us that the S&P usually recovers quickly from geopolitical events. This shows several of those events and mostly short, shallow pullbacks. Explain what we're looking at.
Sure. If you could see, most of the events take place really on the right side of the chart, right? What it is showing is those typical pullbacks in times of conflict really are less than 10%, and they typically will last less than 100 days. Now, there are outliers, as mentioned. So there are times when statistically they're above the averages, but everything pulls back to the averages. That's just the way things work. That's the data, and so this is going to be no different.
Right. It's helpful to look at that because I think when we're living in the moment, it feels like, oh my gosh, it's never been this way before. But
Absolutely.
that being said, so for investors who are watching these headlines, Tom, and rising oil prices, what is the most important perspective that we should be keeping in mind before making portfolio decisions?
Stop looking at the headlines.
I
A
know.
lot of it is clickbait, right?
Yeah.
So understand what your plan is. Stick to your plan. Your plan has been thoughtfully made, hopefully, if you're working with an advisor or a competent advisor. So just stick with the plan. Again, a lot of this is temporary. Stocks do rise and fall, so it's going to happen. But if you've built your portfolio the way that it needs to be built for your situation, then statistically speaking, you're going to be okay.
Right. And I'm glad you mentioned, relying on that plan, which makes us less likely to react emotionally to these headlines that we're seeing. Can you just walk us through again, then, please, how emotional investing tends to lead to bad financial decisions?
Yeah, well, I think in general, emotional decisions will typically lead to a bad decision making. Uh, when we let our emotions get involved, we're selling at losses, we're buying at peaks, so we don't give ourselves the ability really to make money. And if we go back, I mean, if you look at the one of the greatest bull run periods from 2000 to 2012, the average investor after inflation averaged less than almost a 1% return. And that's one of the greatest bull markets of all time, because they let emotion get in the way. If you have a plan, the statistics are going to tell you over time things will work out. If your plan is built for, like a lot of our client plans, for income, then we're not really super concerned with the ups and downs of the markets. It's about how we're generating that income. As long as that income is steady, we know our clients have a paycheck every month.
Yeah, exactly. And then you have peace of mind, which makes you less likely to make those emotional decisions. So I'm really glad, we got a chance to talk this through, because it's helpful to hear the data, makes me feel a little bit more confident in the markets and whatnot. So Tom, if somebody would like to sit down with you, create that financial plan, talk through their plan, like if they're not feeling okay, perhaps it's not in line with their risk tolerance, what's the best way to reach you?
You can give us a call at 973-394-0623, or you could always send us an email with your questions at tjoconnell@internationalfinancial.com.
All right. Tom, thank you so much for your time today again. I really appreciate it.